Sean Emery is the founder and CIO of Avory and Company. Welcome to the show, Sean.
What's going on, guys?
All right, let's go ahead. Let's
Sean,
get
how are
into
you?
it. All
I'm
right, now,
good. It's been a little bit.
Yeah, it's nice to have you back.
Yeah.
I mean, obviously you've been seeing. I want to get your thoughts here because I'm kind of wishy-washy. I'm waiting for the Friday CPI data here. You know, we've had the serious sell-off in basically April and in the first part of May. Now we've had the bounce. What are your thoughts here? You know, going forward here. You know, just talk. You know, the overall markets. Then we can get into some individual stocks.
Yeah, I agree. I can't imagine anyone tries to jump in hand over fist before the CPI print. I think everyone's focused on that. Again, I think over the last several months, again, everyone's trying to understand whether there's peak inflation and what that ultimately means for the Fed in terms of their reaction to it. So it's been kind of the Russian invasion added a little bit more sustainability to some of the inflation numbers. And then you have some of the inventory challenges that again we saw this morning from Target. We had a webcast yesterday, not to promote it, but in a sense, in highlighting kind of all the inventory glut that's out there. And so today's news, or specifically like a couple of weeks ago when Target reported and first put out their guidance, the inventory challenges isn't necessarily a shocker, but it is a signal for potentially more companies to do the same. But again, for us, again, we're staying put. I mean, we from what we do again is try to own good businesses and try to ride these waves and make it through using the business as kind of that durability. But big picture, I think again we have to get through much of this inflation story where everyone is convinced that inflation has actually peaked and is really showing a sign of sliding down.
Yeah,
Sean,
one of the
let's jump into a couple of those good businesses. I mean, we've had a significant sell-off. People ask me every day, "What are you buying? What are you buying? What are you buying?" I want to ask you, Sean, what are you buying?
Well, more of the same. I mean, more of the stuff that we owned. I mean, we're probably full boat now in terms of all the investments that we like. Again, we invest with conviction. So we have kind of 10, 15 names in our portfolio and continuing to cycle through those. I mean, again, highlighting, there's really two things you can do in this environment is, well, there's three things, right? You could hold cash. And again, if inflation's running at 70%, then obviously there's that cost of capital there. But then you have the ability to obviously put cash to work. In some of these companies, I mean, you look across the board, there's really high quality businesses that are well positioned for the future that are trading somewhere in the teens multiples. And then some of the much more high growth companies that are trading, generating free cash flow, but also trading in levels that we think are comfortable. And putting it to work in some of those. Now, on the flip side of that, you can rotate inside of your portfolio and some of the stuff that hasn't got beat up as much, you can take some of that capital and move it into cheaper names. So using less cheap names for more cheap names, I think is how you can improve. Look, we have a long list. You have the Squares that we eventually got back into, or Block. I still call it Square.
I call it Square too.
Yeah. So we that's one of the names that we continue to like. Again, we did have that moment back in 2021. Probably one of our better moves, which was actually selling it when it got into those 200 levels. And we've been big bulls there. Again, we weren't perfect in everything else, but things like Zoom and some others where over the last several months to 6 months, we've been happy about investing in the long term of those businesses.
You think there's some value there? Like Square, here's where I start. I'd love to get back in Square too, but then I look at the multiple and I see it trading, 55 times or whatever. Is it going to grow into that multiple? Like, are we going to eventually look at Square and say, "Man, why don't we pick it up at $83 when this thing is pounding out, $3-4 a share?" Can they do that?
Yeah. So again, here's a company. You have to understand, I think, the investment that they're making into their business and the return on that investment to really understand why you have a suppressed margin and an elevated multiple at just glance, right, at a point in time.
Yeah.
And today, they highlighted on their investor day a couple of weeks ago, really around one, the profitability of those two businesses, which is Cash App and Square Seller. So that's number one. Square Seller has like a 33% margin on a standalone basis. Cash App right now is running 6 to 10% margins on a standalone basis. The bigger story there is the return on their ad spend to drive obviously new revenue into the business. Is Cash App is generating 6x the returns in 3 years on every dollar they put into that ecosystem, and Square Seller is about half of that. They return their dollar back in less than a year. So again, it's super important, I think, to think about that. So as they suppress margins to continue to grow their business, ensuring that business is putting that capital to work in an efficient way. And those are the metrics I think that signal that they're doing so. There's Afterpay and some of the other adjacent ecosystems that they have now that I think help them well, or position them well for the future. So.
So let's talk Apple a little bit here. They had their forum, and it's just kind of we were looking at the chart yesterday, and maybe this is part of the reason the market didn't have the follow through. It just looks kind of tired. Let's talk about their announcements yesterday, and what did you find most interesting?
Yeah, so we're not investors in Apple, but we're big believers in Apple. We were for, I mean, I think everybody that's ever invested has probably invested in Apple at one point in their lives. And I guess yesterday, the developer conference, it's an important day, right? You get to understand kind of the future. Obviously, they control operating systems, right? So anything they say is pretty important. And they really had two different announcements. They had a lot of announcements, but I think one is like the coolest announcement, I guess, that they had. And then one is probably the most meaningful. And the coolest, I'd say, was their functionality around a webcam, a wireless webcam. They called it, I think, continuity camera, which is really just using your iPhone as a camera, but again, wireless. It also had a desk view type of functionality where you could actually see what's happening on your desk at the same time. So think of, you go on Instagram and you watch all those people cooking food, and they have like a camera on the ceiling and a camera in front of them, and all these different cameras that are at work, and they're trying to make that experience a little bit more seamless. So it was a cool function. It's funny because it seems like it's a little late, right? I mean, we're 3 years, 2.5 years removed from kind of like the peak of webcams. And the second one was CarPlay, Apple CarPlay. I think everyone's been trying to understand what the move for Apple is in the car. And again, from a software perspective, what they're doing is bringing CarPlay to touch most of the displays in a car. So think of your speedometer and some of the other cool tools. And if you actually looked at the UI, the user experience or user interface that they highlighted yesterday, I mean, it's definitely much better than kind of the car that I drive today. And you can just see how that could ripple across different car ecosystems and become a operating system. So I think that's the play. I guess from the hardware side, everyone's still kind of sitting on their toes or standing on their toes, trying to figure out, are they going to move directly as a competitor to car companies as opposed to just an operating system? So those are really the two plays.
Okay. It wasn't a real great earnings season. I mean, I guess it was kind of mixed, but you're interested in Zoom here and the strength in the enterprise. Now it had the earnings pop. It's kind of just holding in here. Do you think that you think you've seen a long-term bottom here in Zoom? And what did you like about the report?
Yeah. Right. So the big picture on Zoom is they have to grow their product portfolio. We know Zoom Meetings. That was the initial land. Everybody landed on it, free or paid. And big picture, they have to expand that product portfolio to be a durable, sustainable business. The more products they land into customers, I think the stickier that product becomes, the easier it is to sell into an existing business. That's the important part about the future of Zoom. In addition, moving into bigger businesses, so enterprises. So those were the two key takeaways, I think. This earnings call was really around their ability to land enterprise customers. Enterprise revenue was up 33%. 3,000 customers are now spending $100,000 over the last 12 months. So that's a big number. And then the Zoom Phone, Zoom Contact Center, they announced some big wins there that I think, again, is an early signal. They have $6 billion of cash on their balance sheet, more cash on their balance sheet relative to their market cap than Apple, who we just spoke about. But that puts them in a pretty strategic spot, I think, from a acquiring standpoint, to acquire tools to again bolster that ecosystem. So again, we believe from a valuation to opportunity, this isn't a 350% grower. Clearly, they brought in a lot of growth a couple years ago, but they're still growing, which is kind of fascinating. They probably had the hardest comps in the world. So that's kind of the general takeaway from this earnings call and the company in general.
All right, another one you haven't mentioned to us before. It had a good day, a good couple days yesterday. What Duolingo? Tell us about that. A new IPO, 200 down to 60, back up. What's your thesis on this one?
Yeah, So the language learning app. So we've had plenty of conversations that we've put out there with like the CFO and such. This is a fascinating company. I mean, here's a language learning app. Free to paid, and they have close to 50 million users on this platform. They have more users on their platform learning language than all of the public schools combined in the U.S. It's pretty fascinating to think that. This is a company. When you think of consumer apps, usually there's a high spend on marketing to acquire customers. They spend more on R&D than marketing, which shows the viral kind of nature of their business and their brand. They're one of the strongest TikTok accounts out there. They do a really good job there, and they highlight that they spend essentially $0 on that. And so you have a really, really efficient business. They're 80% of all downloads that we track in terms of language learning. They're moving into math. They have Duolingo ABCs. I recommend trying it out. Become a user. I mean, they're moving from free to paid. 6.8% of their users are now paid users. So they kind of believe a big picture. Where will they land in terms of free to paid? Somewhere like a Spotify or a Match Group or something like that, where you have like those really big loyal users that want to remove ads and increase the functionality. And we think ultimately that is the direction they're headed. And that's kind of the general thesis there on a Duolingo. And they had a fantastic quarter this past earnings report.
All right, guys, we're on the line here with Sean Emery, founder and CIO of Avory Company. I just want to ask you a little bit about Meta here. I did see you guys put out some kind of report. I saw it on LinkedIn about fitness continuing being a large use case for the Oculus. Can you tell us a little bit more about this and how fitness has been being used right now in AR and VR?
Yeah, I mean, you can see my Oculus right here.
Hey, I see you playing.
Yeah, exactly. So I think they have a core business, right? Obviously, we all know the core business and Facebook and Instagram and WhatsApp and everything along that spectrum. And then you have the Oculus side, which is really around the metaverse, right? And the metaverse kind of has a, in some worlds it's a positive connotation, in some it's much more kind of like too futuristic. The reality, I think there's a lot of utility and functionality for commercial enterprises, whether it's like 3D rendering and kind of looking at an airplane in virtual reality to try to understand, should we build this airplane first? And those are kind of like use cases. Now, specific to the fitness side, one of their biggest applications is around fitness. So they actually own Supernatural. They own Beat Saber. They've actually acquired a bunch of the studios that made a lot of the apps inside of the Oculus App Store. And recently, or yesterday, we basically got news that the Oculus Fitness data will stream into the Oculus app, but also the Apple Health Fitness app, so that users can start to track. I've actually used Supernatural on Oculus. Big picture, look, these devices are going to shrink over time. That's just inevitable. And if you just hear Zuckerberg and some others speak, I mean, that's the goal, right? Is to take these devices much more, get them slimmer, more functionality, more powerful. But it takes some time to go along that journey. And again, I've used it for fitness and boxing, and it's actually pretty cool. It's like a pretty interesting experience, and they're growing rapidly there. I mean, Oculus is 70% of Steam rankings in terms of usage for VR headsets. So there's a lot going on there, a lot of good stuff. We think fitness is a big category, and commercial stuff is as well as a big category.
Yeah, one of the things that we're going to be looking at is Project Cambria, right? And how that actually performs. Do you know any insight? Do you got any insight for us on Project Cambria?
Yeah, so it's much more of what they call XR experience, where it's VR and AR, where, if you use the Oculus today, you're very much siloed inside of that experience. And Project Cambria is really supposed to unlock the ability to be in the real world. So like I can feel like I'm in the room, mostly from a color perspective. So on Oculus today, you can see around you, but it's black and white, and it's kind of this weird blurry experience. But on the Cambria side, it's really going to be able to render like everything around you in full color. So if you've seen some of the videos of Zuckerberg, he's like drawing on a wall. But he's actually he's like in the room with everyone, experiencing the actual room. So I think that's an important separation from the VR world to the real world, and combining those two and allowing that experience to take place. It's going to be a higher end headset. So it's going to be, I mean, all the rumors are $700, $800, $900. But again, it's another stepping stone, I think, from increasing and improving the experience of VR, AR, XR.
Yeah, and also moving from Facebook to Meta, right? I mean, we kind of need some more products to really consider them kind of meta, right?
Yeah.
So we'll definitely be watching. Thank you, Sean Emery, joining us here, the founder and CIO of Avory Company. Appreciate you coming on and giving us some insight into the tech world too.
Awesome, guys. Appreciate it. Have a good day.